Well, in the meantime, the Nigeria Employers Consultative Association, NECA, has welcomed the Central Bank of Nigeria's decision to reduce the monetary policy rate from 27% to 26.5%, describing it as a cautious but positive signal to businesses. Now, the employers' body, however, insists that more coordinated fiscal and structural reforms are needed to ease pressure on the real sector. Reacting to the decision, Director General of the Nigeria Employers Consultative Association, Adewale Smart Oyeride, notes that while the 50 basis points cut may not immediately translate into significantly lower lending rates, it reflects a gradual shift towards supporting economic growth without abandoning the fight against inflation.
Well, to help us analyze the outcome of the 304th Monetary Policy Committee meeting and its expected impact on inflation, investment, economic growth, we're now joined by Chijioke Ekechukwu. He's an economist. He's also the former Director General of the Abuja Chamber of Commerce and Industry. Or are you still the current chairman?
No, former DG.
Former DG, so we got that right. Thank you so much for joining us, Mr. Ekechukwu. Now, ahead of this decision, market analysts were so divided. There were those who wanted a cut and there were those who wanted a hold. I wonder where your stance was before this and if there are any surprises at this decision.
Yeah, I wouldn't think there would be anybody who wanted a hold. People would have predicted that there should be a cut here.
But there are those who also wanted a hold.
There were some people who predicted a hold, actually.
Yes.
But not that they wanted.
Well, they predicted.
Yes.
They predicted.
Okay, so you see, we have come a long way considering where our inflation rate has been coming from up to 34%. As at this time last year, early part of last year, we were at that high rate. And over the months, it kept on going down and until we got to where we are today at 15.10%. That has been informing the level of cut or hold that the MPC would always have whenever they met in the past. And I had predicted, I had actually mentioned that I was expecting a cut, considering the fact that consistently the inflation rate had been coming down. And when you also look at other factors, knowing that the major driver of inflation rates was food inflation in the past, and that food inflation is now on a single-digit level of 8.89%. You see that that is a very good development, knowing that which was leading a high inflation rate had come down, which was the food inflation. And so if you also look at the stability in the market, I saw the stability in the market, the FX market, stability in petroleum products prices, and I saw that these were all indicators that we needed to bring down. The essence of bringing down the MPR was just to begin to try to stimulate, because until you start coming down, the deposit money banks are going to continue to sustain very high interest rates, which will not be good enough for the system. But the good thing is that we already have purchasing managers index as high as 55.4, which means that we are doing very well in manufacturing. And we expect that that figure should go up when the system starts stimulating itself, especially with interest rates coming down. So when interest rates start coming down, we expect that all these other areas are going to improve.
Right.
Yes.
I mean, is it safe then to say, Dr. Ekechukwu, that the monetary authorities are beginning, to respond to the sustained pressures that, facing businesses and, of course, the productive sector? How significant is this?
Yeah. Coming from where we were, you see that this is significant. You see, the monetary policy engine, the CBN, had a lot of issues in their hands. First of all, to stabilize the economy, stabilize the rates. They had a lot of things to do. Don't forget, there was also one time we had a lot of outstanding obligations with a lot of international bodies where we were having issues with not even meeting our obligations, and even our letters of credits were being dishonored somewhere in the international world. But of course, all these things have been stabilized. So a lot of work has been done by this institution, and we give them kudos. So now that we have such level of stability, it is time for them to start growing. Of course, I expect that in the next MPC meeting, another drop. Let it be marginal, like this one was, but it was there. We expect that it's going to continue to drop, reacting to the drop in inflation rate. Inflation rate is what it is today. I also expect, while this meeting is going to hold in May, the next meeting is going to hold in May. Right. Don't forget that the inflation rate continues to happen every month. So we expect that before the next meeting, we're going to be having a lower rate. All things being equal. All things being equal. Yes.
Fingers crossed. Hoping that they don't go numb.
Yes.
Let me ask you now, because the most important question for any Nigerian will be, how does this affect me? How does this translate, to outcomes on the ground? Because while the MPR was reduced, the cash reserve ratio was maintained. Now, for banks, are we likely to see lending rates reducing? And for businesses and of course Nigerians in general, any likely impact, even though it's marginal?
Yeah, cash reserve ratio has been there, remaining the same at 45. CBN has been using that to reduce money circulation. They have been using that to also curb inflation rate and things like that. The reduction in MPR is marginal and may not affect significantly the interest rate that may have to come down. It will come down, obviously. I expect that with the number of banks meeting their capitalization levels, we're going to be having the system having a lot of funds. And so if that happens, even the banks on their own will bring down their rates, and because they're going to have a lot of rates, a lot of funds looking for where to put them in. So the rates, because of the supply of money, will actually force them to bring down their rates. That's what I expect to happen.
But some experts say that, reading all of this, that there's a level of cautious optimism. Are you on that side of things too? And what's the basis of this, cautious optimism?
First of all, we should also know that the central bank is a very conservative institution. In all situations, you don't want to take a sharp decision which you're going to reverse tomorrow. Right. It's good for things to be in sequential growth and sequential reduction. In that way, you have to be cautious because there are many other factors that influence the economic situation of any particular country. Global economic situation also will influence us. We don't even know what is going to happen tomorrow. Somebody somewhere in the US may just wake up and take a decision that will affect the global economic situation. So we need to be cautious in taking certain decisions so that even when that happens, the shock will not be so much upon us. That's why we need to be cautious.
Internal factors, like the trends, the inflation trends, continuing to improve, inflation rates stable, and of course investor confidence. All things being equal, like you pointed out earlier. Okay. When you have all of this scenario playing out, what are your projections?
Our projection is the fact that as far as we continue to maintain stability is very important. Not just what the rates are, but that stability. The fact that an average business person in Nigeria can can actually plan with what rate he's seeing. As far as we have that stability in all the rates, it is obviously necessary that we think that we're going to start improving, and gradual improvement is what we expect to happen.
Not a very important question in 20 seconds because we have to go.
Yes.
We are all waiting for INEC to adjust to the new Electoral Act. But given the reduced number of days, our elections is likely to fall between December of this year and January next year. Do you think that the decision taken today has any bearing when it comes to elections, when you talk about factors? I mean, spending across board has increased, including INEC's proposed budget and political spending.
It is actually the other way around.
Okay.
The decision and the spending of INEC will or may affect the next decision that may be taken. Because with election spending, a lot of things are going to happen. Money will flow back into the system. And when that money flows back into the system, it may affect the control of the monetary policy in terms of having to reduce money circulation. We don't know the extent. Most of these monies may not even be within regulated areas.
Right.
They'll be coming from somewhere, and so you can't even measure the volume of money, the amount of money that will come into the system. So that may actually affect the decision that was taken today. Yes.
All right, Dr. Chijioke Ekechukwu, thank you very much for joining us, renowned economist, joining us on Newsnight tonight.